So, good evening, everyone. Uh, Once again, to the third session. Those students who are participating for the first time, they need to watch the previous two sessions, which is freely available on the YouTube too. Right. So, once again to the session, and of course, as in the previous two sessions, we are going to discuss important previous year questions based on economy, and obviously that is going to be quite useful for your upcoming 2025 pre-examination of civil services, right? So, dear friends, we have extensively discussed a number of important previous year questions extensively. So, let us discuss the remaining questions, right? So, we had discussed up to 42 questions, right? This was the question that we had not discussed. We are supposed to discuss. Okay. So just let us have a look at the question and then we are going to discuss, right? What this question is saying? It says an increase in the bank rate generally indicates that we understand that what is bank rate, right? It's a long-term rate that RBI gives to other banks and financial institutions of the country. We have already discussed all these things, right? So in the class, right? So it says market rate of interest is likely to fall. No, it's not that. Central bank is no longer making loans to commercial. No, it is not. Right? Central bank is following an easy money policy. No, it has nothing to do with easy money policy. Right? When a bank provides money at a very low rate of interest, that is considered to be an easy money policy. But that is not the case. Central bank is following an increase in the bank rate generally indicates, right? Obviously, if there is an increase in the bank rate, so central bank is following a tight money policy because it is increasing its rate of lending. Bank rate, right, is basically the interest rate for the long term, right? We have discussed in the class extensively about repo rate, reverse repo rate, bank rate, right? CRR, SLR, right? So we have also discussed bank rate. It is a long-term rate, a lending rate extended by RBI in country. Okay, so this would be the option. Okay, let us see the next question. It says consider the following liquid assets. Liquid assets, I mean, it has nothing to do with water. Liquidity in financial terms means currency. It's any asset that can be easily converted into currency, right? So consider the following liquid assets. It says demand deposits with the banks, time deposits with the banks, saving deposits with the banks, currency. Currency is considered to be the most liquid. It is considered to be the most liquid, right? Then we have a different types of deposits, demand deposits and time deposits, right? And then we have saving deposits, so demand deposits. So just you are supposed to look at the given options, which starts with this 4, right? So currency. So it starts here. There are two options only, option B and D, right? And then it says 3. So saving deposits, no. Demand deposits is considered to be more liquid in comparison to saving deposits. Demand deposits, we know that current deposits, right? So obviously demand deposits happens to be the second. So obviously this would be deleted. So A, and then we have, let us understand the currency decreasing order. You are supposed to tell the liquidity in decreasing order. So the highest one happens to be the highest liquid, happens to be currency. Then we have demand deposits. Second, then we have saving deposits. Third, and obviously time deposits. Like, right? Like FD is done. Fixed deposit, recurring deposits, we have studied in great details in the class, right? So this is the decreasing order. So that would be, the option would be D. Okay. Let us see this question. In the context of Indian economy, open market operations, OMO, it's a major, one of the important functions of monetary policy of RBI, right? So open market operations. There was also a question related to open market operations in the perhaps first or second session we had discussed. So what is it? What is open market operations? What happens in open market operations? Purchase and sale of government securities happens. It is one of the steps of sterilization. Whenever there is excess supply of money, so obviously inflation goes up, right? So immediately RBI takes steps to suck out the excess liquidity, right? To reduce the amount of excess liquidity. And if the supply goes down, so accordingly government takes the steps. So obviously purchase and sale of government securities by RBI comes under open market operations. So sale and purchase of government securities. Now let us see the next question. Consider the following statements. Inflation benefits the debtors. Debtors, right? Those who people take debts are debtors. Those people who give are known as creditors. So inflation benefits the debtors. Inflation benefits the bondholders. Bondholders are who? If you buy stocks, right, and if you buy bonds, so right, bondholders are known as creditors, right? Bondholders, if you buy bonds, you are known as creditors. You are lending money, right? And if you are buying share, so you are buying ownership. Getting the point? So this is the difference that we have discussed already in the financial system. So now inflation benefits the debtors. We know that when inflation goes up, the value of money goes up or down. Whenever inflation goes up, the value of money goes down. So obviously the creditors suffer because those people who borrowed, right, obviously they will pay back a reduced amount, right? So when inflation goes up, debtors get the benefit while creditors suffer. Yes. So obviously bondholders will suffer because they happen to be creditors. You see, that's the reason I keep on emphasizing that unless you have conceptual understanding, then it is going to be very difficult, because the moment question is manipulated, you won't be able to answer the question appropriately. Here, if a candidate who does not know what is the nature of bond, right? So whether the person who buys bonds is a creditor or a debtor, then will get confused, right? So inflation benefits the debtors. We have already discussed at great details in the class, and inflation benefits the bondholders. This is wrong. So only A would be the answer, right? Because inflation, in fact, it opposite happens. Creditors suffer. It says which one of the following is likely to be the most inflationary in its effect? What a step that is going to increase the effect of inflation? Right? It says repayment of public debt. It says it will increase, it will be the most inflationary. You have to be very careful with words. It is saying the most inflationary. So, repayment of public debt, it could be. But let us see, borrowing from the public to finance a budget deficit, no. If you borrow from the public, so obviously it will not be inflationary. Borrowing from the banks to finance a budget deficit, again, it would not be. Creating new money to finance a budget deficit, it is considered to be the most inflationary in effects. And that's the reason now central governments have been debarred directly borrowing to maintain budget deficit, though they borrow through various methods. So this option would be the most correct. This would be the most inflationary in effects, right? So creating a new money to finance a budget, right? So printing money. I mean, perhaps in the second session, I was discussing about a web series, Money Heist, right? So, I mean, that is the philosophy which drives some robbers to print money and take out. And their premises is that if governments can do so, why can't we print money, right? So, this is going to be the most inflationary in nature. Now, let us see this question. It says supply of money remaining the same. If the supply of money remains constant, right, the same, when there is an increase in the demand for money. So when the supply of money is constant and when the demand for something goes up, so obviously its value will go up or down. Will go up naturally. It is a very basic concept of demand and supply. And this is applicable also in the case of currency, money. So a fall in the level of prices, no. Because demand is increasing, and increase in the rate of interest, obviously, when demand for something goes up, its value also goes up, right? A degree, obviously, it is talking opposite. An increase in the level of income and employment, no. So option B would be the correct one. Okay. Good evening, Gudia. Good evening. Good evening, those students who have joined late. Just I saw your messages. Okay, so I'm pretty sure you are able to hear me properly. Okay. Now let us discuss the questions. Now it says the basic aim of lead bank scheme. Lead bank scheme we have discussed in the class. In the types of banks. It says big banks should try to open offices in each district. No, that is not the case. There should be stiff competition among the various nationalized banks. No, that is also not. Individual banks should adopt particular districts for intensive development. Yes. All banks should make intensive efforts to mobilize deposits. No. I mean, it talks about that individual banks should adopt particular districts for the intensive development of that particular district, that particular place. Right, so that is the basic aim of lead bank scheme. That bank should lead, right? Adopt certain. They should, in fact, focus particular areas, right? So that would be. It would be C, right? Okay. Now let us see the next question. Now, it says RBI acts as a banker's bank. We know that RBI is a bank of last resort, is a banker's bank. It's a banker to government, be of a state or central government, right? Or of banks. So, it says other banks retain their deposits with RBI. Yes, they retained in the form of CRR. Yes, they are supposed to, because we have already discussed yesterday that, and also of course in the class, that how a bank or a financial for that matter earns money, right? So it is based on the difference between deposits and lending. So in the difference, right? So the difference between them is its profit. So other banks retain their deposits with RBI, and RBI makes it mandatory that these banks and financial institutions should deposit certain amount of their deposits. Okay, so this is correct. RBI lends funds to the commercial banks in times of need. Yes, that is correct. The RBI advises commercial banks on monetary matters. Yes, of course, it advises. Right. So obviously, all these three options, so that would be D. Okay. Now, let us see the next question. It says, which of the following measures, right, steps would result in increase in the money supply in the economy? How the money supply will increase? Now, the first option is purchase of government securities. If you government securities from the public by the central bank. So if you purchase, if you buy, so when you buy something, in return you pay money. So what do? You are purchasing government securities from them, and in return you pay money. So when you pay money, so obviously the money supply will decrease or increase? Will obviously increase, right? So yes, this will increase. Deposit of currency in commercial banks by the public. If they put their money in commercial banks, so obviously money supply will come down. So that won't increase. Now, borrowing by the government from the central bank. If borrowing is done by the government from the central bank, so if borrows, so central bank will lend, and when government borrows, it spends, right? So obviously it increases the money supply in the system. Getting the point? So okay, so now you can understand that first and third, first and now, so first and third, we should have first and third. There could be misprinting, right? So remember, so that would be B. Now you see, again, questions are frequently asked on this bank rate and right, CRR, SLR, right? So you see, the lowering of bank rate by the RBI leads to, if the bank rate is lowered, it means central bank is charging less money, and when charging less money, so more liquidity in the market, less liquidity. Lowering of bank rate means when you decrease the interest rates, people will demand more money or less money? More money. Getting the point? So what happens? More liquidity in the market? Yes, that sounds good. Less liquidity in the market? No. No change. No, this won't be the case. There would be mobilization of more deposits by commercial banks? No. This one, A would be the thing. Getting the point? Now, let us move on to the next. A rapid increase in the rate of inflation. A rapid increase in the rate of inflation is sometimes attributed to the base effect. Do you remember I was talking about the base year? Okay, good evening, Jaya, good evening. Right. So, those who are online, I'm pretty sure they are able to understand the questions that we are discussing. Right. Okay. So, a rapid increase in the rate of inflation. When there is a rapid increase in the rate of inflation, it is sometimes attributed to the base effect. Right. What is the base effect? I mean, there is a base year. I mean, base year is when inflation is considered to be, right, stable. An average of inflation is taken of a particular year. So base year is taken. So it is the impact of drastic deficiency in the supply due to failure of crops. It has nothing to do. It is the impact of the surge in demand due to rapid economic growth. No, it has nothing to do. It is the impact of the price levels of previous year on the calculation of the inflation rate. Yes, it is the impact of the previous levels of price levels of previous year, base year. I mean, in national income accounting, we have discussed that base year inflation is calculated on the basis of base year. Current year's inflation is not added. Otherwise, the price level will skyrocket. Right, Krishna? Good evening. Yes. Right. Okay. So it is the impact of the price level of the previous year on the calculation of inflation rate. And this is known as base effect. Right. It is the effect of base year. Okay. It says which one of the following statements is an appropriate description of deflation. You see, we have discussed inflation, deflation, disinflation, reflation, different types of terminology, different types of inflation, right? So here it is talking about deflation, right? We know that what is inflate? There is a word inflate, and from this inflate word inflation comes, and the opposite happens of deflate, right? Deflate means, right, it is the opposite of inflate. So that is known as deflation. So it is a sudden fall in the value of a currency against other currencies. No, right? Here we are not talking about a stock exchange. Exchange market. It is persistent recession in both the financial sectors of the financial. No. This is not right. It is a persistent fall in the general price level of goods and services. It is a persistent fall. Yes, this is the correct one. It is a fall in the rate of inflation over a period of it will become disinflation. It will become disinflation. We have discussed at great length about the difference between deflation and disinflation. Right? It is talking about deflation, not disinflation. So if there is a fall in the rate of inflation, right, over a period of time, that is known as disinflation. But here, if there is a persistent fall in the general price level of goods and services, this is known as deflation. Right. So those who are present in the class will be able to understand. Okay. So it would be C. Let us see the next question. It says, with reference to India, consider the following. It says nationalization of banks, formation of regional rural banks, adoption of villages by bank branches. Which of the above can be considered as steps taken to achieve the financial inclusion? Financial inclusion, you understand? That each and every section of the society should be included, especially the weaker ones. And financial allocation should be made to those sectors of economy, especially agriculture and MSMEs. Nationalization of banks was done, and one of the important objective was to ensure financial inclusion, right? Because majority of the people, especially from the rich section, were able to utilize its benefits. So that's the reason nationalization of banks took place. Formation of regional rural banks. Obviously, RRBs were set up, and its major objective was to increase the rural prosperity, right? So obviously, financial and adoption of villages by bank branches. Yes, this is also correct. So 1, 2, and 3. That would be, so that would be D. Okay. Now let us see what is it saying. Which of the following brings out the consumer price index number for industrial workers? Which of the following for industrial workers? Consumer price index number we have discussed in right in consumer price CPI we have already discussed. So there are different types of. So this labor bureau, remember this labor bureau, Ministry of the Employment, right? So so this labor bureau brings out this consumer price index for industrial workers, right? For agriculture workers, for rural workers, we have discussed all these indexes are brought by labor bureau. Okay, now let's move on to this question. NBFCs, with reference to the non-banking financial companies, NBFCs in India, consider the following statements. We had discussed this question when I was discussing about major types of banks in India, right? We had discussed NBFCs also. Okay, so they cannot engage in the acquisition of securities issued by the government. No, they can. With reference to, consider the following. They cannot engage in the acquisition of securities issued by the government. They can, right? They can engage, right? So this is incorrect. They cannot accept demand deposits like saving account. They cannot, yes, they cannot accept demand deposits. NBFCs do not. So they cannot accept demand deposits like saving accounts. Yes, they cannot. This is correct, right? These NBFCs cannot accept demand deposits, right? Because then regulatory system they will have to follow of RBI of maintaining CRR and SLR, right? So that is not the case with the NBFCs. So second statement is correct. So what it would be? B. Which of the statements given above these are correct? Only B. Let us understand the next question. When the RBI announces an increase of cash reserve ratio, CRR, right? What does it mean? Right? Commercial banks will have less money to lend. What happens when in CRR cash reserve ratio? Whenever RBI increases, we have discussed all these things in the class, then obviously banks are supposed to keep higher amount of money with RBI, with the central bank. So obviously the commercial banks will have less money to lend, because if CRR is increased, they have to deposit more amount of money, right? So they will have less money to lend, right? So RBI will have less money to, when the RBI announces an increase of the cash reserve, what does it mean? Right? Commercial banks will have less money to lend. RBI will have less money to lend. No. RBI will have naturally more money rather. Because if it increases, it is the commercial banks who are supposed to deposit in the form of cash only in CRR, right? So that is not the case. Union government will have less money to loan. No, union government has nothing to do with it. Commercial banks will have more money to lend. It is the opposite, right? So A would be the correct option. Let us see. In the parlance of financial statements, investments, the term bear denotes, signifies. We keep on hearing about that market being bullish. Have you seen there is a bull before the stock market? Right? So bull is considered to be, it's a positive. Right? While have you ever seen any picture, any statue of bear? No, that is a symbol of ill omen. Right? And if something which is considered to be inauspicious, that is not included. So bear means negative. So we keep on hearing that the market has become, or investors have become bearish. So when the market starts going down, the market becomes bearish. Right? It means goes down. And when market becomes bullish, it means the prices of a stocks starts increasing. That's the reason we have a bull, the statue of a bull before stock market. Right? So in the parlance means, right, discussion. In the discussion of financial investments, the term bear denotes an investor who feels that the price of a particular security is going to fall. Yes, that sounds very good, but let us see other options. An investor who expects the price of particular shares to rise. No, it is talking opposite. Shareholder or a bond holder who has an interest in a company, financial. No, that is not the case. Right? Any lender, whether by making a loan, no, that is not the case. So this is A. A is going to be the correct option. So remember, bull and bear. So bull. So whatever is considered to be auspicious, we have a statue of bull in front of, right, stock market, right? So bull and bear, remember. Okay. Ombudsman, you understand? A kind of officer which it adjudicates, right? Resolves grievances, right? What we call in Hindi Lokpal. There was a whole Lokpal movement in India in 2012. So, I mean, you can understand ombudsman, right? What does it says? It says, with reference to institution of banking ombudsman in India, we can say that this is a grievance redressal officer. I mean, it's a higher. Which one of the following statements is not correct? Right? Which one of the following statements is not correct? You have to be very careful with the word not. The banking ombudsman is appointed by the RBI. That is good. That is correct. The banking ombudsman can consider complaints from non-resident Indians having accounts in India. Yes, they can also consider. There is no issue. The orders passed by the banking ombudsman are final and binding on the parties concerned. Are not final. I mean, the highest judiciary, only the judgments of Supreme Court are considered to be final. Even their judgments are filed for reconsideration from time to time. Getting the point? So obviously it is not final. Obviously its judgment plays a very significant role, but yes, its judgment can be challenged in a higher court. Right? So the service provided by banking ombudsman is free of any fee. That is also correct. Right? Only C is incorrect. Right? So that would be the option, because that is not correct. Okay, so C would be the option. Okay. Let us see this question. It says, which of the following terms indicates a mechanism, mechanism means system, used by commercial banks for providing credits to the government? Right. So what is the system? cash credit ratio, debt service obligation, liquidity adjustment facilities, right? Liquidity adjustment facilities, you know that CRR, SLR, all this, there are, right? SLR, in SLR, you know, that banks, we have discussed in SLR that banks are supposed to maintain certain amount of their total deposits. Certain amount of their total deposits they are supposed to keep with themselves, and certain amount they are supposed to keep with RBI in the form of CRR in cash, right? So in SLR, banks are supposed to also borrow certain government securities, and that is a way of lending to government. So in a way, government borrows. We have discussed all these things in great details in the class, right? So those who are not present, so just you should try to understand, right? When you will come in the class, then I'll dictate in much greater way, right? So SLR, through SLR, I mean certain amount of cash the bank is supposed to keep. Then there are government securities. So if government securities banks are keeping with themselves, so obviously they are, I mean, what are they are investing in government securities, right? So I mean that is, so the government is borrowing from them. So which one of the following terms indicates a mechanism used by commercial banks for providing? So they provide credits to government, right? So when they invest in government securities, obviously they are paying credits. They're giving money to government. So in a way, government is borrowing, right? So this is SLR. Okay. What does S&P 500 relate to? S&P we have discussed in the stock market, right, in the class. S&P, this comes under Nifty, right? Nifty, right? So S&P 500, this is an index of Nifty. Okay, so not supercomputer, a new technique of e-business, no. A new technique to bridge building, no. An index of stocks of large companies, yes. This one, right? It's a representative of 5 large companies, 500 large companies of Nifty, right? NSE, we call it. Okay. Now, it says the repo rate. You see, repo rate is the rate at which other banks borrow from RBI. This is correct. Reverse repo rate. Now it is called term reverse repo rate. Term repo rate. Right. So obviously reverse repo rate is just the opposite. So the first sentence happens to be correct. Now it says the value of 1 for Gini coefficient in a country implies that there is a perfectly equal income for everyone in its population. Gini coefficient is used to show income inequality. Gini coefficient is used to show income inequality. And what is its measurement? 0 to 1. 0 shows perfect equality. And 1 shows worst form of, right, inequality. So here it is saying a value of 1 for Gini coefficient in a country implies that there is a perfectly equal income for everyone in its population. You're getting the point? Gini coefficient is basically a kind of index to measure income inequality in a country, right? And what is the measurement? It is measured from 0 to 1. 0 means perfect equality and 1 represents worst form of inequality. Getting the point? Here it is saying opposite. Here it is saying a value of 1 for Gini coefficient in a country implies that there is a perfectly equal income for everyone in its population. No, that is not. It is the opposite. So second statement happens to be incorrect. Getting the point? So which of the statements given above? Only A is correct. Right? We had in the class we had studied different kinds of indexes. We had discussed Gini coefficient. So Gini coefficient happens to be one of them. Right? Okay. Now debenture holders. You see, I mean debenture. What is debenture? It is basically unsecured. Right? It is an unsecured bond. Right? Unsecured. So debenture. So debentures, I mean unsecured bonds. So bond holders are what? They are creditors. Right? So here it is saying debenture holders of a company are its what? They are not shareholders. Those people who buy equities, stocks, shares are shareholders. Right? They are not debtors. Debtors are those people who borrow. They are not borrowing. In fact, the debenture issuing company happens to be debtor because they are borrowing. Those people who are buying these debentures, right, bonds, are in fact creditors. A few minutes ago, I discussed about it. So they are basically creditors. They are not directors. Directors are entirely different. Getting the point? So debenture holders of a company are its creditors. Now, let us see this question. What is it saying? It says, consider the following: market borrowing, treasury bills, special securities issued to RBI. Market borrowing, treasury bills, special securities issued to RBI. Which of these are components of internal debt? Right? All these three are part of. These are the means through which government borrows. Because how can government borrows? It cannot go and just take the money out from, right? From, yes. So what it would be? Obviously all the three. So it is not that the government can take out whenever it wishes, right? So there are certain ways through which only it can raise money. Okay. Now let us see this question. It says, consider the following statements regarding the RBI. Now you can understand that this question could be formulated in a different way. It could be called that what are the major functions of RBI? Right? So it says it is a banker to the central government. It formulates and administers monetary policy. Right? It acts as an agent of the government in respect of India's membership of IMF. Obviously, it represents India. Right? So at the international forum, it handles the borrowing program of the government of India. Yes, it borrows. So, I mean, obviously, it manages the bank accounts of union government and state government. So, yes, all these are correct. So, what it would be? 1, 2, 3, and 4. So, C would be the correct option. Right? Now, let us move on to the next question. Again, this relates with financial market of India that we have discussed in the class thoroughly. Now, what does it say? A rise in Sensex means, if there is a rise in Sensex, Sensex is an index of Which stock market? BSE or NSE? BSE, Bombay Stock Exchange. Sensitive index, Sensex. A rise in Sensex means a rise in prices of shares of all companies registered with Bombay Stock Exchange. It says a rise in the prices of shares of all companies. No, these indexes show the average increase or decrease. Right? Average increase. It is not necessary that if Sensex is rising, it means all the companies' shares are increasing. No. I mean, it has 30 sensitive. So it shows 30 largest companies, right? It shows average. So this is incorrect. A rise in prices of shares of all companies. A rise in the prices of shares of all companies registered with NSE. No. Sensex is not related with NSE. Right? If you're not aware that which index is part of BSE or NSE, so you will get confused. Right? So an overall rise in the prices of shares of group of companies registered with Bombay Stock Exchange. An overall rise. It says an overall rise. Right? It is not saying that it is rise in the all shares of all the companies. A rise in the prices of shares of all companies belonging to a group of companies, obviously not registered with. A rise in the price of shares of all. Again, here it is talking about all companies. So it would be C. So you're supposed to opt for the most balanced option, right? And there is a way that certain options could be weeded out because of their extreme uses of words. Okay. Gilt-edged market means gilt-edged securities are government securities. It has nothing to do with metals or bullion market. Gilt-edged securities are basically government securities. Right? So remember this. Okay. Okay. Now let us see. From the balance sheet of a company, it is possible to. When you know that the balance sheet, the income and what is the balance sheet? I mean, it's an account of income and expenditure. So what are the sources through which the income is coming? The cash flow and where it is going. So that is the balance sheet in simple terms. So to judge the extent of profitability of the company, assess the profitability and size of the company, you have to select the best possible option. I mean, these are also aspect, but it is not possible. I mean, let us see the best option. Determine the size and composition of the assets and liabilities of the company. Determines the market share, debts and assets. I mean, you cannot know what is the market share. You cannot understand by seeing the balance sheet. But obviously, you can make out that what is the debt and assets, but it is very difficult to understand the market share by looking at its balance sheet. Right? Because it does not show the balance sheet of entire market. It is the balance sheet of a particular company. So obviously you can determine the size and composition of the assets and liabilities. Right? What are the assets? Those things from where it generates money for the company, and liabilities where it has to pay. So obviously C would be the best option. Okay, this question, I mean, just don't focus on these options. Focused on this question. The supply side economics lays greater emphasis on the point of view. Supply side and demand side. Remember, this question could be reframed in two ways. Just don't look at the options. Supply side represents economics lays greater emphasis on whom? Obviously on producer. On producer's point of view. Because who produces? I mean, production of goods and services happens. It is done by producers. And when it happens from demand side, so obviously, who demands? Obviously, consumer. Consumers, right? So from demand side, I mean, the emphasis, greater emphasis is laid on the perspective of consumers. But on supply side, Economics lays greater emphasis on the point of view of producers. Remember this options, right? Okay. Now, let us see this question. It says, which one of the following is not as instrument of selective credit control? Credit control, we have studied quantitative and qualitative means of credit control in India, right? So quantitative and qualitative instruments of monetary policy. So regulation of consumer credit, which one of the following is not? Remember. So regulation of consumer credit, yes, this happens. Rationing of credit, yes, this happens. Margin requirements, yes, this happens. Variable cost reserve ratios, these are not included as an instrument of credit control in India, right? So we have discussed all these things in quantitative and qualitative means of monetary policy, right? So all these things come, but this fourth one does not come. Okay. Now look at this. Again, bank rate comes. And the question is manipulated every time. Bank rate, repo rate, reverse repo rate, CRR, SLR, inflation, deflation, disinflation. These are the things that questions keep on cropping up. It says bank rate implies that the rate of interest. Right. So what does bank rate implies? Paid by, bank rate is not paid by RBI. RBI lends, it does not pay, right? So bank rate implies that the rate of interest paid by RBI, no, RBI does not pay. It is the other banking and financial institutions which pay. Bank is the rate, is a long-term rate at which RBI, the central bank, lends money to financial and banking institutions. So this is incorrect. It has been framed in a very deceptive way so that majority of the candidates would get confused, right? Charged by banks on loans, charged by banks on loans and advances. I mean, banks do not charge in bank rate. It is the RBI, the central bank, which charges, right? Remember. So again, payable on bonds, it's not a bond at which the RBI discounts the bills of exchange. Yes, it has been slightly made, it has used very technical terms, right? So this would be the D. That would be the correct option, right? So that's the end of the questions, right? So finally we come to the conclusion of this 3 sessions that we had been discussing, and I'm pretty sure that you must have found all these 3 sessions quite fruitful, and it will give a fillip to the students who are aspiring to sit for this 25 examination. And once again, I would like to highlight that conceptual understanding of economy plays a very significant role in any candidate selection in economy section, right? So obviously, your conceptual understanding should be supplemented, should be complemented with current affairs, right? So if you are having conceptual understanding, so you will also be able to understand the current happenings around you, right? Be in the world or outside of the country, right? So keep on practicing, right? And let's hope for the best. I wish you everyone, those who are appearing for 25, all the best. Thank you from my side.